welcome to Somewhat Scholarly. My name is Alan Hibbard, and today I am doing a reaction video to an episode of the Peter Schiff Show podcast. I've been listening to Peter Schiff for many years, and I think it's time to do a reaction video to one of his podcasts. In general, I agree with most things that he says. However, I do not agree with him on Bitcoin. So he thinks Bitcoin is a bubble. He thinks it's going to zero. I don't think it's a bubble. It might go to zero, but I don't think it will. But anyways, this particular episode is called, Is the Bitcoin Game About to Stop? And this is a reference to GameStop. And we'll talk about that throughout the podcast. I'm sure Peter's going to mention it. And this was recorded January 25th. And so that was 6 days ago as I'm listening to it now. So let's get going.
But the real action was to the upside mostly, but somewhat to the downside. But the big gains in the most heavily shorted stocks. So these are the stocks where you have a lot of short interest, meaning that investors have sold these stocks short. They've sold the stocks, they don't own them, they expect the price to go down, so they borrowed the shares from people who own them, they sold them into the market, and they're hoping to buy back the stock at lower prices and make a profit. Well, these stocks are going up, and if you're short a stock, you don't want it to go up, right? And the shorts have been losing a lot of money, especially over the last couple of days. And you know, there is an old saying in the investment game that markets could remain irrational longer than you can remain solvent. There's a lot of stocks like this, and yesterday they had a big day. Today they had an explosive day, although a very volatile day, because most of these stocks closed way off their highs, although they were almost all still positive on the day. But the poster boy for the short squeeze over the last couple days is GameStop Corporation.
Okay, so Peter's been talking about GameStop for the first 10 to 15 minutes of the podcast. So basically, let me just summarize what he's saying. Basically, he told the story of what's been happening in the past week with the stock. And for those of you who don't know, there was a hedge fund that decided to short GameStop. In other words, bet against the stock price, hoping that the stock price goes down. So, okay, this position was known publicly based on hedge fund disclosures. And some people on Reddit picked it up and said, hey, you know what? Let's stick it to the hedge funds. Let's stick it to Wall Street. And let's try to make the stock go up. So a bunch of people on Reddit bought the stock. Like a lot of people drove up the stock price. It more than doubled within a day. And I forget exactly how high it ended up going throughout the course of the week, but it made some pretty big gains. And of course, this hedge fund lost a lot of money, billions and billions and billions of dollars, almost to the point of bankruptcy. I'm not exactly sure how that was resolved or if it has even been resolved yet. But it's a very interesting event, certainly. And, I'm sure a lot of people had a lot of fun with it. However, it's mostly an emotional event. Like a lot of people were excited to stick it to Wall Street or, get back at the 1% or whatever they thought they were doing. Maybe some people even thought they were getting rich. Who knows? Doubling or tripling your money in a day or in a week is obviously pretty great. But it's not over, right? And the stock probably will go back down to where it was before. And GameStop is probably headed towards bankruptcy. So it's like, okay, maybe if you made some money, you still got to get out, and then the stock price is going to go back down. But anyways, I don't want to speculate in that regard. But the point is, GameStop as a company didn't do anything differently to make its stock go up, and it's not going to do anything differently to make its stock go down. So the stock price in this particular company had nothing to do with the underlying economic reality. That's kind of the key takeaway. And Peter, I think, is going to draw an analogy to Bitcoin and basically say that the price of Bitcoin has no basis in economic reality. So if and when he gets there, I'll comment on why the two aren't an appropriate comparison. It's definitely not apples to apples, so we'll get there in a second.
So this could be an inflection point in the markets, one of these big flashing neon signs of a market top. But the other lesson that I think people can learn from this applies to Bitcoin, which I've been talking about a lot as Bitcoin has been making new highs. Because a lot of people think, hey, Peter Schiff, you're wrong, right? Because you don't think Bitcoin is real money. You don't think it has any intrinsic value. You don't think it's going to work. You don't think it's going to succeed in being able to do anything that all the proponents claim it's going to do. But you're wrong because the price is going up. The price going up doesn't mean that I'm wrong. In the same way that the price of GameStop going up doesn't mean that the hedge funds that have done their homework and have shorted GameStop are wrong on where they ultimately believe GameStop is headed.
Okay, yes, I do agree with Peter here that just because the price of Bitcoin is going up doesn't mean Peter is wrong about Bitcoin. I think Peter's wrong about Bitcoin for different reasons, and we're going to get into those, I'm pretty sure, or at least some of them today. And the same thing is true of GameStop. So I totally agree with what he's saying here, is that you can be right or wrong for the reasons you believe something, and then the price can go up or down in what seems like a related way or an unrelated way, and it's not necessarily validation that you were right with your original assessment. So I totally agree with Peter. So I think he's going to make another comparison to Bitcoin coming up, and I will elaborate more when he does.
But my point is that the people who are buying GameStop, all these Robinhood day traders, they don't know anything about the company. They don't know nearly as much about the company as the guys over at Melvin Capital, who did a lot of homework and probably understand the business and the problems inherent in that business much better than the people who are now making money on paper. That's why being short is so dangerous. That's why Warren Buffett has said in the short run, stocks are a voting machine. In the long run, they're a weighing machine, because in the long run, it's the value that gets weighed. But in the short run, it's just a popular opinion. Do people want to buy something? And the price goes up. And that's exactly what's happening with Bitcoin.
Okay, so I definitely agree with Peter that the retail investors who are buying GameStop in general have no idea what they're doing, right? They're making an emotional trade, right? They're doing a kind of FOMO, some of them. Certainly the ones who are later to the game, they do have a fear of missing out on this movement of getting back at Wall Street. Obviously not everyone, but a lot of them. I've even had a couple friends text me in the last couple days, hey, what do you think of GameStop? Like, should I get in? I'm like, I'm kind of shocked, actually. Like, are you kidding me? And these are people who don't trade professionally, obviously. They're at best hobbyists. And so I think, the hedge funds focus on this all day, every day. It's their job. It's their career. So, yeah, they probably have a better sense of where things are going in the long run. But in the short run, it's just like that quote that Peter read from Warren Buffett. It's like, in the short run, stocks are a voting machine. It's just like, what do people think? Popular opinion. In the long run, stocks are a weighing machine, where it's like, how much stuff is really there, right? What's the actual heft? What are you actually getting out of this company? So, in the long run, the stock is going to go where it should go. Let's put it that way. And obviously, that's true of Bitcoin as well, right? In the long run, the price of a Bitcoin is going to go in whatever direction the value of a Bitcoin actually is. So we will see, and it sounds like Peter's going to talk more about it right now.
Also, another famous Warren Buffett expression is price is what you pay, but value is what you get, right? People are buying GameStop at crazy prices, but the value is not what they're getting. I mean, the price is not what they're getting, it's the value. They're paying a high price, but the value is the value. And when it comes to Bitcoin, see, if somebody buys Bitcoin at $33,000, that's the price they paid for Bitcoin. But how much value did they get? They got no value, because Bitcoin doesn't have any value. You get the value, but you pay the price. The same thing, if GameStop is ultimately going to go bankrupt and it doesn't have any earnings and it doesn't pay any dividends, do you get any value when you buy the stock? No. The price is not a reflection of value. It's just a price that is the market has assigned based on supply and demand. And that's what's going on with Bitcoin.
Here's where Peter and I disagree on value itself, right? Which I think is one of the most fundamental definitions to build an argument on, really, is what is value, right? What is value? And so Peter's quoting Warren Buffett here saying, price is what you pay, value is what you get. I agree with that. I think that's a really nice way of thinking about it. So the price is very objective, right? If something's $100, that's the price. There's no debate about it. I mean, you could negotiate the price, but then once you agree on a price, the price is the price. You could say whatever you paid, that's the price. But the value is subjective, right? Even if you have it, even if you have something, whether it's a stock or a glass of water, the value of it is subjective, right? How valuable is that to you? It depends, right? It's going to vary from person to person. And that's incredibly important to understand. And I think Peter overlooks that for some reason, that the value of anything is subjective. Anything. Even the value of a stock is subjective. The price is not. The price is objective, right? We can put a number on it, but the value is subjective. And in the case of GameStop, where we see a pretty obvious bubble taking place over the course of a week or whatever it's been, some of the value that the traders are getting, or actually probably most of the value, almost all of the value, is purely emotional. But that's real. That's a real value, right? That's why you have friendships. It's for emotional benefit. That's why you have, a significant other. That's why we have things like freedom. I mean, democracy, happiness. I mean, these are all emotional things. They're all emotional things. Everything we do is for an emotion. That's why we achieve stuff and feel like we're the best and a winner and successful and competent. It's for the emotions we get. And we do so many things to avoid pain. We avoid stress. We avoid all these negative things. Everything we do is for our emotions. So if something provides emotional benefit, that's value. That's real value. So if people are just buying into GameStop because of the emotional high they get, that's an actual value. It's not what stocks are for, quote unquote. It's not what they're for in theory, but that's what people are getting out of it. So there's going to be an element of an emotional benefit, whether an asset's price is going up or down or sideways or whatever's happening, right? There's emotions involved. Same thing is true with Bitcoin in the sense that there are emotions involved. Some people are into Bitcoin for the thrill they get of being part of a revolution. Others are into Bitcoin for non-emotional things, or I should say more long-term emotional things. For example, I feel safe, right? I use the word feel, right? That's a feeling, and safety is the feeling. I feel safe that the government's not going to steal my money. But if I were in something else like US dollars or perhaps even gold, right? US dollars are very easy to confiscate, especially if they're digital, and gold is much harder to confiscate than dollars, but easier to confiscate than Bitcoin. That's a real benefit for me. Like, that's probably the primary benefit, is I don't want people taking my value. That's it. Stop stealing from me. I don't care if you're the government or someone who just breaks into my house. Just don't steal from me. And so I get an amazing benefit from owning Bitcoin. How valuable is it? Would I pay $30,000 or $100,000 or $5,000? It's really hard for me to say. Really hard for me to say, but I think the value of that on a per Bitcoin basis is so much greater than the current price. So much greater. I think this is a problem that every single person on the planet has, including Peter, and he uses gold to solve that problem, right? To store his value, basically, and to protect it from thieves, whether they're waving the same flag as you or something else. So that's a real benefit, and it creates emotional safety, number one. I mean, and there's plenty of others. Right? You could feel competent. Like, I feel very competent for having analyzed Bitcoin from sort of a fundamental perspective, looking at the code, understanding what it is, doing my homework, doing my own research. I feel competent having analyzed it. Yeah. And I feel very powerful owning it. I feel very safe, right? All these feelings that have been created based on, my analytical work and the way I think about it, and how much time I dedicate to it, even like a YouTube channel, right, and doing these reaction videos. I spend so much time thinking about it. And if I'm wrong, I want to figure it out early and then get out of my position and get into something else so that I feel like I have greater conviction, so I have greater safety, so I have greater power, so I have greater control in something else. If there was another asset that gave me more of those feelings, I would just go into that asset. I'm not like married to Bitcoin. So I think GameStop and Bitcoin really shouldn't be compared. It doesn't make sense. Like, just because we see a very clear bubble in one area, it doesn't mean that anything that is having its price go up nowadays is also a bubble. Like, that just doesn't make sense.
Now, I'm not short Bitcoin, right? So to me, it doesn't matter how high the price goes. It doesn't affect me. It's just a sideshow, right? But if I was short Bitcoin the whole way up, it would be a big problem. Right? Now, ultimately, would my short position pay off if Bitcoin goes to zero? Of course. But I might not be able to remain solvent enough to realize the gain, because I may not be able to fund the margin calls as greater fools kept buying the stock and bidding it higher and higher and higher, right? That is the problem. Another, again, old expression is that when it comes to bubbles, the market first bankrupts all the people that bet against them and then bankrupts all the people that bet on them. Meaning, if we apply that to GameStop, a lot of the shorts are going to get squeezed out of this stock with heavy, heavy losses. And the way they get squeezed out is they're buying the stock. But they're buying it because the price is going up. And why is the price going up? Because other people who don't realize the stock is worthless are paying these high prices and squeezing out the shorts. So eventually all the shorts are gone, right? And now you just have a bunch of longs who have paid very, very high prices to buy the stock. Then when the shorts are gone, the stock collapses. Because of course the shorts represented pent-up demand, right? Everybody who shorts the stock eventually has to buy it to cover their position and to square the books. But once you no longer have the shorts to buy the stock, who's going to buy it? And once the momentum goes away, of course, value investors aren't going to come around to buy these names. So initially, the people who were right and got short, they go bankrupt. Then the people who were wrong and got long, they go bankrupt second. And the same thing is going to happen with Bitcoin. A lot of the people who think they're so smart because the price of Bitcoin has gone up a lot since they bought it, they're no smarter than the people who bought GameStop. Right? They're lucky in that other people made the same mistake they did and bid the price higher.
Okay, so I definitely like that adage. I haven't heard that before, that in the case of a bubble, right, first the market bankrupts those who bet against it, then the market bankrupts those who bet on it. I like that, because while it's climbing up exponentially, if you bet against the market, you lose everything. And then obviously when it comes back crashing down, anyone who bet on the bubble, who bet on that asset, they lose everything too. So that's kind of a nice way to think about it, but that's for a bubble, right? That's for something that definitely is a bubble. Is GameStop a bubble? Very clearly, yes. I don't think anybody, including the executives of the company, I don't think anybody would argue that it's not a bubble, right? This little mini, week-long event. Is Bitcoin a bubble? I don't think so. I mean, could it go to zero? Of course it could, but just because it does go to zero, that doesn't mean it was a bubble all along, right? It could be something that happened, right? Something that happened in the world, something that happens with technology, or who knows what happens. So just because something goes to zero doesn't mean it was a bubble all along. So is Bitcoin a bubble now? I don't think so. I really don't think it is. I think Peter just doesn't understand what Bitcoin is, actually. I mean, he's been saying for years that Bitcoin just has no value. And I think, based on what I said a minute ago, you can say that something has no value to you personally, but to say that it has no value to other people, I don't think is a claim that you can make. So it's like I couldn't tell Peter what's valuable to him, right? I don't get to say that has no value to you. All I can say is what's valuable to me, right? And Peter, all he can say is what's valuable to himself. So to say that something has no value whatsoever, I think is unfair. And to claim that Bitcoin is a bubble, I mean, okay, you can say that, but what are your reasons? I mean, I haven't heard any convincing reasons why Bitcoin is a bubble. Including from Peter. So I'm sort of waiting for those reasons.
In fact, I talked on my last podcast about Michael Saylor and how Michael Saylor is going around and he's having this big conference now. He's trying to get other companies to, plug their balance sheet into Bitcoin. This is what he's saying, that you need to take some of your cash and buy Bitcoin with it. And the reason you have to do that is because Bitcoin is going up so much. So why just let your cash sit there and have inflation erode it away at 2% or 4% a year when you can supercharge your balance sheet by buying Bitcoin? Well, he may as well go out there and be telling all these corporations that they should supercharge their balance sheets by plugging into GameStop. After all, GameStop is up way more than Bitcoin this year. So if the reason that you buy Bitcoin is because it's going up, right? Because he keeps saying, well, Bitcoin is going up more than gold, right? That's why you shouldn't buy gold because it's too slow, right? Buy Bitcoin because Bitcoin is beating gold. Well, GameStop is beating Bitcoin. So if that's your logic, if you just want to buy the fastest horse in the race, well, why ignore GameStop? I mean, it's way faster than Bitcoin. It's lapping Bitcoin. So why don't all these corporations just pile all their money into GameStop?
Okay, I mean, okay, that's funny. Like, Peter has a lot of really funny things, but I mean, that's I think it's obvious to me. I don't know how sincere Peter's being here in his like criticism of Michael Saylor, but it's very obvious that that's not Michael Saylor's logic. He's not saying just pick the thing that goes up the most. Period. End of story. That's not what he's saying. He has said Bitcoin is the fastest horse. Sure, but if you think about, or if you hear what he says and listen to his other interviews that are more than 5 seconds, right, more than just like one sentence or a soundbite, he's talking about a store of value, right? A stock, no matter what company you're picking, it's not a store of value, right? And Peter knows this. So I don't know why he's like being so silly here. This is clearly not one of his better arguments. But yeah, Michael Saylor is talking about a store of value to replace cash on his company's balance sheet. And if you don't know, he's the CEO of MicroStrategy, a publicly traded company. So he replaced a lot of cash on his company's balance sheet. I think he's over $500 million that he has replaced with Bitcoin. So instead of holding dollars, he's holding Bitcoin for his company. And that's just the cash position. That's not like his speculative investment part of his company. No, it's cash. So this is a huge move. Couple companies have followed suit, and Michael Saylor is trying to get more to follow. And his point is that you don't want to sit in cash. You have to pick a real store of value. Let's put it that way.
You know, now I know Saylor would try to say, "Oh no, but Bitcoin is digital gold." No, it's not. It's no more digital gold than GameStop, right? I mean, in fact, it probably has more in common with GameStop than it has in gold. Although it doesn't have much in common with GameStop, because GameStop is an actual business. Although if it's a money-losing business, then it may not have any value, and that's what it has in common with Bitcoin. But it's the market dynamics that is important. You can't just say because something is going up, you should buy it. You have to understand why it's going up and is the gain sustainable. And in the case of GameStop and Bitcoin, it's not sustainable.
Okay, so Peter definitely does not buy into the Bitcoin as digital gold narrative, right? He thinks that gold is physical, Bitcoin's not. That's true. And that gold has use in industry, right? Whether it's dentistry or aerospace or electronics or whatever, and that's true. But he also has this definition in his mind that in order for something to be money, it has to have use in industry, and that it's impossible for something to be money unless it has some other use as well. Okay, I mean, he's allowed to have that definition, but it's not a definition that everyone else in the world has, right? I just disagree with him. I guess I don't know personally thousands of people, but I know there are thousands of people in the world who disagree with him, and they totally believe that things can be money, and that's it, right? They don't need a secondary use, or even they don't need a primary use, and then money is a secondary use. I think it actually makes more sense if the thing you use for money is only used as money, and then you don't have fluctuations in value based on the industrial use. So I actually think it's better for an economy if the unit for money is only money, and that's all it does. But getting more directly to his definition, we've actually seen examples throughout history of raystones, for example, and tally sticks, and there was a third one I had in my mind. I forgot what it was, but raystones, tally sticks were used only as money. That's it. That's the only thing they were used for. So we've already seen examples of that. So this definition that Peter uses is just something that he's clinging to in his mind despite evidence to the contrary. So, I mean, he's perfectly entitled to not like Bitcoin and not use it for himself and thinks that it has no value for himself. That's fine. But there's value for the rest of us. And it's not like we used gold as money because it was used in industry. We used gold as money because it was portable, durable, divisible, fungible, produced by work, right? Hard to inflate, all these different things. That's why we used it as money. It just so happens it also can be used for other things. So if we can create something that is portable, durable, divisible, fungible, blah blah blah, unit of account, store value, medium of exchange, all these different like buzzwords, whatever, that serve all those different purposes. If we can just create that, then great, we have a money, right? And it's more portable than gold. I mean, it travels at the speed of light essentially around the earth. So I just disagree with Peter's definition there, and I don't think that definition is useful. I don't think his definition is useful, but perhaps in a twist of irony, his definition provides value to himself. He's defined money in such a way that he derives emotional value from clinging to that definition. And I don't mean that as a criticism, but I think his tendency to cling to that definition, in spite of evidence to the contrary, right? Other examples of monetary systems that don't have industrial use, that are solely for the purpose of money.
But what I think Saylor is hoping to do is con corporate CEOs into padding their earnings. Hey, just shove some of this Bitcoin onto your balance sheet, and if other corporations buy it after you, then they're going to push up the price, and now you're going to be able to mark your paper gains to market and claim that they're actual earnings. See, that is a whole part of the pyramid dynamic, the Ponzi dynamic, is the price on paper keeps going up as more people buy, but you have to buy in earlier because you need those later buyers to push up the price to make your buy, go up so that you look like you were prescient and you were smart and you got in early. Except I have a hard time believing that any corporate CEO who is dumb enough to gamble on Bitcoin at $30,000, $40,000 of Bitcoin, they're not getting in anywhere near the bottom. In fact, you're probably better off going with GameStop than Bitcoin. But it is a very good lesson to learn and for people to understand it. Just because something's going up doesn't mean it has value, and it doesn't mean the people who are buying it are right.
Okay, he's definitely right. Just because something is going up doesn't mean it has value. That's true. However, he says that Michael Saylor's trying to get all these companies to buy Bitcoin now because the price is going to go up, and that's the Ponzi dynamic. This is what Peter's saying, that you got to get people to buy in early, because if you buy in late, you're a sucker. Okay, that's true in Ponzi schemes, yes. But this feature of buying in early being better is also true of legitimate assets, like gold. Like if you buy gold earlier than everyone else, that's better than buying it later. That doesn't mean gold is a Ponzi scheme. So, I mean, you can call Bitcoin a Ponzi scheme, but that doesn't make it a Ponzi scheme. You got to explain why it's a Ponzi scheme.
While I am on the topic of Bitcoin, I want to talk a little bit about the Grayscale Bitcoin Trust, GBTC, because I talked about this fund, and I talked about the premium that it was trading at over the value of its portfolio of Bitcoin and other cryptocurrencies, crypto assets. And at one point, that premium got as high as 40%, and I talked about that on the podcast. And at the time, my forecast was that eventually the premium would go away and then turn into a discount, and that when that happened, it would be lights out for Bitcoin and there would be a major crash. But here is the more important dynamic. And I described it originally. I think I may not have had all the facts until I read this other article, and this guy seems to have done more homework. I was just speculating. But I was thinking that Grayscale was selling the shares of Grayscale Trust into the market and getting the premium, and then taking all that extra money and buying Bitcoin in the market. And that's why Grayscale is the biggest buyer of Bitcoin. Actually, it was doing it differently. Grayscale was allowing certain institutional investors to buy stock pretty much every morning at net asset value. So it was issuing new stock at net asset value and taking in the cash. And then it was using that cash to go that evening or that day, and it was going into the market and buying up Bitcoin, driving up the price. So the gain was not going directly to Grayscale, because Grayscale was selling the new shares at their NAV. they were handing this huge gain to the institutions who were buying these shares directly from Grayscale. So that might be where the institutional demand was coming from. But it wasn't because they wanted to buy the Bitcoin. They wanted the free money. And why are these institutional investors who have bought into Grayscale at NAV, why are they able to flip it at an instant profit? Well, because you have retail investors who are just buying it, who actually do believe in Bitcoin and have been fooled by all the nonsense, and so they're paying the premium. And so that spread is what was driving that institutional demand that was feeding GBTC with cash, which it could then use to buy Bitcoin in the market and keep that whole thing going.
Yeah, he actually makes a great point here. So there's a lot of retail investors who are coming in buying GBTC, right, an exchange-traded fund, which is not real Bitcoin, right? They own Bitcoins, right, and the price of the fund is designed to track the price of Bitcoin. So in theory, it's the same, but in practice it isn't because there's a premium. So it trades either significantly above or slightly above or potentially even below the price of Bitcoin. And if you're a retail investor who's owning GBTC, do you understand the difference between actual BTC and GBTC? Like owning actual Bitcoin versus owning a promise to try our best to track the price of Bitcoin? There's a huge difference there, just like owning physical gold versus a gold ETF, owning physical silver versus a silver ETF. Right, a promise to try our best to track the price of something is not the same as actually owning the thing. Another important thing is that, yes, these institutions who are coming in and buying GBTC at net asset value and then selling it at market value are basically making risk-free profit. Sure, that's not new. that didn't start with Bitcoin, and it's certainly not going to end, anytime soon. But the fact that they do that on Bitcoin doesn't make Bitcoin inherently worthless. Just like if they did that, well, they do that on gold ETFs and so forth. That doesn't mean that gold is inherently worthless, right? So just because there are financial derivatives based around something, it doesn't mean that the underlying something is worthless. Just because there are, mortgage-backed securities and credit default swaps and all these CDOs and CLOs and all these fancy derivatives that cause a housing crisis, that doesn't mean that everyone's house is actually worthless, right? So it doesn't mean Bitcoin's actually worthless. So in other words, if you want to establish that Bitcoin is worthless, you got to make that claim and then provide evidence for it directly. Like Bitcoin is worthless because blah, blah, blah. Like what is the reason? Don't just dance around it without justifying your claims.
Now, here's where it really gets ugly for Bitcoin. What happens when Grayscale Trust starts trading at a discount? What happens if it's at a 10% discount to Bitcoin? Now, it's a competition with Bitcoin. Why buy Bitcoin when I can buy the Grayscale Trust and get Bitcoin 10% off, right? So now, instead of fueling demand for Bitcoin, it siphons demand away from Bitcoin because money that otherwise would have been used to buy Bitcoin, instead that money buys GBTC. And so now you're taking even more demand away from Bitcoin in addition to the absence of the GBTC demand. And so now the price falls even faster. And as the price starts collapsing, the people who own GBTC, they want to get out. But they can't get out by redeeming for NAV. They have to sell into the market, which could put even more downward pressure on the price, which means the discount to NAV gets even bigger, and now it's a vicious circle in the other direction.
Okay, part of that, definitely. The other part, maybe, but not necessarily. So, yes, if GBTC starts trading at a discount, so let's say the price of actual Bitcoin is $10,000 and you can buy GBTC, right, the ETF, for $9,000, right? So instead of $10,000, $9,000. Yeah, which one are you going to buy? I mean, I probably would buy the GBTC with some of my dollars I have sitting around, just very little. I'm sure some people would obviously buy the cheaper one, even though it's not real Bitcoin, but that would probably be, Well, I mean, a whole bunch of different reasons. It could be on the expectation of profit. Maybe you actually sell one Bitcoin for 10,000 and then you buy back the fake Bitcoin for 9,000, and obviously you make a profit. So it could be that, but people who do that will have a tendency to bring the two prices together, right? That will bid up the price of the ETF, and it will bid down the price of actual Bitcoin until they meet somewhere in the middle, somewhere between 9,000 and 10,000, and then the opportunity disappears. So that doesn't necessarily lead to a crash. I mean, it could, but you'd have to have You'd have to have people who want to sell the ETF and sell actual Bitcoin in way greater numbers than anyone who wants to buy in both assets. So, I mean, that's possible, but it wouldn't happen just because the ETF trades at a discount.
So we have to watch that premium, and if I'm right, if we do slip to a discount with GBTC and we stay at a discount, then there could be a major collapse in the price of Bitcoin, which certainly would make sense that we have a major collapse. And if we get down to 20,000, right, which would be a normal pullback, right? We broke out. 20,000 was the high. We broke out. We got to 40,000. We pulled back. Then we go to 20,000. All right, now we've retested the old highs. But then where do we go? Because a lot of people are going to be very confident that, well, we're just going to go right back to 40,000. But how do you know the next 20,000 move won't be to the upside? It may be to the downside, right? So there's going to be even more risk in Bitcoin if it goes down to 20,000, contrary to what some of these guys have been saying. They've been trying to claim that the higher the price goes, the less risky it gets. Well, the reality is the reverse. Now, I could imagine these young Robin Hood, GameStop hodlers, the way they're making fun of all the old guys who, are short the stock, the hedge fund guys that did all their homework and did all their research, and so they determined that GameStop was overpriced, and so they're short, and now you have all these Robin Hooders that are making a ton of money on paper because the price of the stock keeps going up, and they're making fun of the people who are short, right? Because these guys just don't get it. They don't understand. They don't understand gaming. They don't understand technology, right? They're too old. They're just a bunch of boomers, and so they don't understand. And so if they did, they would buy. So they better have fun staying poor because they don't own the new thing, right? The stock is going to keep going up, and what emboldens them to believe that they're right is the fact that the stock has gone up, and that's what makes them so confident that the people who are short are wrong. But in reality, when it comes to the fundamental understanding, they're the ones that are wrong, and it's the short sellers who are right, despite what's happening in the short run in the market. And that is the same thing with Bitcoin. When you get all these young guys telling me that I don't understand money, I don't understand economics, that I'm in the horse and buggy days, I don't get the new technology. I get it all. I've done my homework. I've studied it all. It's because I understand Bitcoin that I don't own it. That's why I'm so confident that it's going to collapse. The people who understand GameStop are the ones who are short. They're the ones that are right. The people that don't know anything, that don't have a clue, are the ones that are happily making money because there's a supply of fools out there who also don't understand the truth, and all they are doing is reacting to a rising price. And that is the exact same dynamic in Bitcoin.
Well, I've said it before that I agree with Peter on GameStop, but I do not agree with him on Bitcoin. So yeah, I mean, you've got a bunch of retail investors that are bidding up the price of the stock, GameStop, and they don't really know what they're doing, from an investing standpoint, whereas the hedge funds probably do. They just had an issue with timing. But in the case of Bitcoin, I don't think Peter's analogy that, the young guys telling the old guys they don't get it, that's not a good analogy, right? That doesn't make sense. I think Bitcoin is a very valuable, real thing, and it should be priced very differently than a stock because it's not a stock. It's more akin to gold. It's definitely a commodity, and it's a digital commodity. And time will tell. if Peter is right or if I'm right, or I guess if it's somewhere in the middle. But I don't think Peter's reasons for disliking Bitcoin are very good. I don't think he has good reasons. It's not a Ponzi scheme. It's not worthless. It's not something that has zero value, because value is subjective, right? That's up to each person to decide.
But the same dynamic is likely going on with Bitcoin. There are some whales out there who are in Bitcoin solely for the purpose of selling it. And all this hype, all this positive talk about everybody else needs to ignore the FUD and just stay long and never sell. And this is digital gold, and it's going to flip gold, and then it's going to flip the stock market and the bond market, and it's going to be the only asset that everybody's going to own. If you just buy it and never sell it, then you're going to be rich. This is exactly what you would expect them to be saying. It's an old poker expression. If you're at the table and you don't know who the patsy is, it's you. Well, if you own Bitcoin and you don't understand that it's just a big bubble, then you're the patsy, and you better get out. Otherwise, you're going to be the one left holding the bag.
Okay, well, I definitely agree that there are some people who are shrewd investors who made money on GameStop while the price went up. And I also agree that there are shrewd investors who make money on Bitcoin while the price goes up. Right, and in both cases, these shrewd investors don't actually want the underlying asset. They just made a momentum trade or whatever they were doing. Sure, those people exist. But I don't think in Bitcoin that's very reflective of the average investor, even the average whale investor, right? Peter mentioned there are whale investors in Bitcoin who are in it for the sole purpose of buying low, selling high quickly. There could be some doing that, obviously. And I don't mean like high frequency trading or like market making, that type of thing. Obviously, that's going to be there. That's going to be there in every market. Obviously, the whales are doing that. It sounds like Peter's saying that, buying at 10,000, selling at 20,000, maybe a few months later. Yeah, I mean, there are big whales that do that, but the big whales I know of, like Michael Saylor of MicroStrategy and so many others, they're saying buy and hold for the long term. They're saying 5 years, 10 years, possibly longer, 50 years, I've heard people say. That's how I think about it too, generally. But I'm also not a whale, so it doesn't matter. It's not part of Peter's argument. So I don't think he's taking a very representative sample and, taking that view of, never sell, hold it forever. He's almost contradicting himself there in the words he's putting in other investors' mouths. He's sort of contradicting himself. So, I respect Peter a lot. I pretty much agree with him on almost everything in regards to the economy and almost everything in regard to politics. I don't think he makes a very strong case against Bitcoin. He's funny. He has like entertaining stories and analogies and witticisms. But I think when you boil down what he's saying to the substance of his argument against Bitcoin, I still haven't found a valid criticism from him that I can't break apart and analyze and rebuild in a stronger way. I mean, I just haven't found that type of argument from him yet. So I remain open to it. So guys, if you enjoyed this video, please give it a thumbs up. And if you want to respond to any arguments that Peter made or that I made, please do so in the comments section. I am always trying to improve my thinking, so if you can help me out, I would appreciate it. And if there's anything you want to see me react to, either a podcast or a video or an article or anything, let me know in the comments section. Thanks, guys. See you in the next one.